You're viewing the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for October 25th, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.98 rose from 0.97 last week, remaining in very slightly bearish territory. The total count of securities in bullish or bearish patterns rose 5% to 2,827. The count of bearish stocks increased 5%, while the count of stocks in bullish patterns increased 6%. The Pirls PNF Market Breadth Summary Chart shows us a market now 21 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive our free information via email, simply enter your email address in the provided space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 100 points for the sixth advance in 8 weeks. At a negative 160.31 points, it continues below all 8 tops above plus 100, continues above the August 2015, the October 2014, the May 2014, and August 2014 bottoms, and has now risen above the January 2015 bottom, the 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. 1 week ago, at Thursday 10:15 close, the CCI 20 daily formed a zero-line reject pivot point within the plus or minus 50 range, so we entered the long trade simulation at Friday open. At Wednesday 10:21 close, the CCI 20 dropped below plus 100, so we exit the trade for a profit of 3.60 points on the Nasdaq, or 62 cents per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly has risen to plus 20.03 from minus 37.30 last week, and continues inside the plus or minus 50 range required for a valid zero-line reject short entry signal should the CCI 20 weekly fall next week. Industry rotation the last 2 weeks. All of the top industries are positive, and only 2 of the bottom 5 are negative. Bullish semis continues in the top 5. Comp Tech has entered the top 5. Oil has left the top 5. Oil services and oil have entered the bottom 5. KBW Bank and brokers have left the bottom 5. S&P Retail, networkers, and computer hardware have left the bottom 5. Bearish, gold and silver continues in the top 5. Focus this week from www.theautomaticearth.com. Everything's deflating, and nobody seems to notice. By Raul Ilargi Meyer. The following are some key points from the article. Deflation itself has long begun, but because of confusing, if not conflicting definitions, hardly a soul recognizes it for what it is. We are, as we speak, witnessing a momentous debt leveraging or debt deflation in real time, even if prices don't yet reflect that. Consumer prices truly are but lagging indicators. If you look just at consumer price movements to define inflation or deflation, you will find it impossible to understand what goes on. First, if you wait until prices fall to recognize deflation, you will tend to ignore the deflationary moves that are already underway, but have not yet caused prices to drop. Second, when prices finally start falling, you will have missed out on the reason why they do, because that reason has started to build way before a price fall. Everything and everyone is over-indebted. All of the above stats and a million more point to the beginning of a deleveraging of that debt, something that, curiously enough, hasn't happened at all since the 2007 and 8 crisis. Debt that has been inflated to such extreme proportions must lead to deflation, and do so in spectacular fashion. As long as politicians and media keep talking about disinflation and central bank inflation targets, and all they talk actually about is consumer prices, we will all fail to acknowledge what's happening right before our very eyes. That is, the system is imploding, deflating, deleveraging. And before that is done, there can and will be no recovery. Indeed, this current trend has a very long way to go down. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a productive and prosperous week coming up, and wishing you true success.